Good morning, ladies and gentlemen. My name is Alex, Senior Account Executive at GDMFX with your European session outlook. We'll start with the North American markets. Investors this week will see if the US consumer is opening his wallet and whether he has more in it to spend, as early holiday shopping sales data roll in and the November jobs report indicates whether there has been any real wage growth. The Dow Jones is 7 points down, the Nasdaq ended 15 points down, the Dixie is up to 100.16 from 99.78 on Friday. Biggest mover was USD Canadian dollar, 80 pips up. Today's events are Tier 2, they're from first from Canada, the current account for the third quarter, from the US Chicago Purchasing Managers Index for November, pending home sales for October month-on-month and year-on-year, and the Dallas Fed Manufacturing Business Index for November. For the coming week, we'll have on Thursday, Fed's Yellen is going to testify. On Friday is the NFP, the most important event, and the unemployment rate for November. In Canada, we'll have on Wednesday the interest rate decision and rate statement, and on Friday, net change in employment for November and unemployment rate. All right, on to the EU markets. On Friday we had the EU services and economic sentiment, both better than expected. The services at 12.8, which is 0.8 better than expected, and the sentiment at 106.1, which is 0.2 better than expected. We had EU consumer confidence at negative 5.9, which is 2 points better than expected. And the German GfK consumer confidence at 9.3, which is 0.1 points better than expected. German retail sales came out early this morning, year-on-year 1.4% less than previous, and month-on-month 0.4% less than previous. We're going to have talks between the EU and Turkey on the refugees about keeping the nearly 2 million refugees on Turkey's territory. Turkey will also likely receive 3 billion euro for this. And they also would like acceleration of talks for acceptance into the European Union. Today we have German CPI, Swiss COF leading indicator, and that's the most important thing for the EU markets today. Onto the UK markets, the GBP against the Euro, USD, and Australian dollar all produced a negative trend heading into the weekend, with anyone hoping to use sterling as a purchasing currency, seeing their exchange getting slightly more expensive. This was mainly due to underwhelming GDP figures released for the British economy, summarizing growth during the third quarter of this year. Growth for the year had already been revised downwards in October, when the provisional figures were collected for the UK between July and September. Friday's data confirmed this, and the foundations of sterling's recent strength were shaken enough to produce the gradual GBP euro slide throughout the day back down into 1.41. No new data sets concerning UK economic performance are set to be released today to reverse this negative trend. Today, we will wait for the consumer credit and mortgage approvals data to be released. Okay, now the Asian and Pacific markets, we had Japanese news. Industrial production year-on-year 0.6% worse than previous, now negative 1.4%. Industrial production month-on-month 0.3% better than previous, 0.3% now at 1.4%. Retail trade month-on-month 0.3 better than expected. Retail trade year-on-year 1.9% better than previous, now at 1.8%. And we had Kuroda's speech. Some of the highlights from his speech are Bank of Japan has ability and strong determination to achieve the 2% inflation at earliest date possible. Japan economic fundamentals are strong. Corporate and household sectors have improved a lot compared to a few years ago. Japan's price trend is improving steadily. China and other emerging markets are clearly slowing, which is weighing on Japan exports. Bank of Japan must be first one to act to dispel deflationary mindset, which is why it has promoted the quantitative easing. July-September GDP shows Japan's final demand is growing. Price trend is improving, not just because of weak yen, but because more firms are raising prices of their goods amid improving job conditions, and expect Japan to grow above its potential heading into next fiscal year. The weak yen is pushing up import prices, but price gains are spreading to broad range of goods. All right, in the Pacific, we had the Tier 2 news from New Zealand, the building permits, which are 5.1% up from previous negative 5.8%, and Australian securities inflation month on month, 0.1% better than previous, and year on year is unchanged. Australian private sector credit month on month, 0.7 better than expected, and year on year unchanged. While there is a negligible chance of the central bank board cutting its record low 2% benchmark at Tuesday's meeting, the first half of 2016 remains in play with a 50% chance of a reduction. The case for a cut was bolstered last week as the price of Australia's biggest export, iron ore, fell to a 6-year low of 43.89 a dry ton, compared with almost 120 about 18 months ago. All right, last sector is commodities. Gold prices held mostly steady in Asia on Monday as investors bought after sharp dips in the US last week. Oil prices fell sharply in low volume trade on Friday as concerns about a global supply glut continued to pressure prices. Crude oil rebounded in Asia this morning with an OPEC meeting this week in focus for statements on demand and supply in the coming year, though no cut to production levels is expected for now. Gold had a range of $19, trading at $1,055 now. It's going down. Silver had a range of 36 cents at $14.04 now. Crude oil had $1 range at $41.71 now. And natural gas is trading at $2.20 at the moment with a range of 3 cents. All right, everybody, this was the outlook for today. This was Alex with you. I will see you next time. Goodbye.